Happy New Year, everyone. We are recording this, so please put yourself on mute if you're not already, just to stop any background noise or feedback. How this works is you might notice that Cass is not in her office. She's actually in a hospital. Her daughter had a minor accident at home. Don't panic, she is being looked after, but she might need stitches very soon. So if and when that happens, Cass will be jumping off. Now, we know that's inopportune because everyone wants to talk to Cass. So how we're going to suggest to do this is, if you've got a question you want Cass to answer, quickly put it in the chat, type it in the chat, and that way we can go through and she can answer as many as she can now, or possibly in the chat. Her daughter's getting the stitches. I'm just going to put her up there for that one, holding her daughter's hand and typing in the chat. Anyway, so how this works is, if you've got a question, you just stick your hand up normally and ask it. But because Cass may be jumping off at any minute to go and attend to her daughter who's getting stitches, we recommend you just shove all your questions in the chat as quickly as possible, and we will cover as many as we can. So Cass, do you want to say hello? You'll have to unmute yourself, sorry.
Yeah, hi everyone. Yeah, sorry about the inconvenience, but yeah, I did not quite expect my daughter to go through a shower screen this morning. And you know what it's like when your kids are sick. She needs me to hold her hand. They've come to see her. I've just got a message from her. They've come to see her, but no, it's just a nurse, so that's fine. I'll have a bit longer. So yeah, as Mary Jane said, if you want to chat with me, put your questions in quickly and I'll start answering them in case I have to jump off. We do find that at least half these questions Mary Jane can answer anyway. So the ones that she can answer, I'll skip so that she can come back to them when I hop off. So I'm just going to have a look through the chat.
Yeah, no question. But if anybody...
Yeah, and sorry, I've got a bit of noise going on in the background. Yeah, the way it does work, we find that some people are just on here to have a listen and listen to others. That's absolutely fine. We find once the questions start, everyone gets on a roll, and then the questions come flooding in, and we normally go for a whole hour. But yeah, I guess just while we wait for some questions, it's certainly been a very, very big week for anybody that's watching what's going on in the world at the moment. We won't discuss all the crazy things in the world, but we'll stick to the financial topics, which for those that know can see that silver and gold, but particularly silver, is absolutely going through chaos. I was watching it just one day. I think it was Monday. It went up 10% just in that day. It then drops back down again, and then it comes back up again. So there's a lot going on. But if anyone wants to know more about it, we have just sent out a newsletter. If you're not on the newsletter, put your email in the chat, or let Mary Jane, email Mary Jane privately and she can put you on our newsletter, because we do just send out good information about what's happening. Also, if you're not on our Facebook, Freedom Financial Solutions Facebook, jump on that, because we have just started a 1 out of 10 posts on what's happening in the market, because it's quite mind-blowing. And for those of you that don't know, I've been in the financial world for 30 plus years. As an accountant, financial planner, mortgage broker, property advisor, tax agent, superannuation, you name it. But even I've find it very difficult to actually explain what's happening in the silver market. I mean, I know, it's in my head, I know what's happening, but to put it in simple words is really confusing. So I did just design a 10-part Facebook post explaining step by step. Just while I wait for a few questions, I'll say as much as I can explain. And that is that there's this crazy thing called short selling, where basically companies that need silver, or they're basically just betting on silver, and banks that are betting on silver, they do what's called short sale, where they say, well, we don't think it's going to go above $75 an ounce, so we're going to short sell it. But if it does go above 75 an ounce, all of a sudden we're going to have to buy a whole lot of silver to repay the people that we've promised we're going to sell the silver to. It's crazy. I don't know why they ever came up with these things called derivatives. But anyway, so what's happened is that it's been predicted that if silver went above $75 an ounce, that's US dollars, it was going to crush the financial system, absolutely destroy it. And what we saw just before Christmas is it did hit the $75 an ounce, went above it, over the Christmas break or leading into New Year. From what I can see and what I've read up on is that all the elites and the bankers got together and panicked and did a whole lot of their control mechanisms to bring the price back down, which they did. But then as soon as the markets opened back up for the year, it broke through 75 again. Then they brought it back down again. Now it's broken through, and I haven't checked the market today. But as of yesterday, it is skyrocketing well and truly above that. I think it was up to 80 or 80 something an ounce yesterday and continuing to grow and grow and grow. So what that means in layman's terms is this could be the beginning of the end. For those that have watched me for quite some time, I've been saying that there is something that's going to break the financial system, whether it be a war, whether it be another virus, whether it be whatever. This definitely, and this is not just me saying this is all the financial experts around the world saying this, that this silver breakthrough, and this is what we explain in the newsletter and on our Facebook posts, this silver breakthrough could be what they call the leading cause of the financial system to break. Because what it's going to do, if it continues, is break the US banks, the big ones like JP Morgan and BlackRock and similar ones. And once they break, the cascading effect could be GFC 0.2 very, very quickly. So, I mean, is that bad news? I actually think it's good news. It's certainly good news for anyone that's listened to us and bought gold and silver. Maybe not so much good news for people who are heavily invested in the share market, because a financial crash would lead to, GFC was a 50% crash on the share market. A lot of experts are actually saying that this one will be bigger than that. Some experts like Jim Rickards have been saying for a while now that the next crash will be the biggest in human history. And the biggest one so far was in the 1920s or 30s, I can't remember, but it was 80%. And they are saying it will be bigger than that. So not very good if you're invested in the share market, which hopefully not many of you are. But really good for people holding gold and silver, because gold and silver are the ones that tend to absolutely escalate in a financial crisis. So anyway, that's a bit of a chat from me as to what's going on at the moment. As I said, follow our newsletter and follow our Facebook, and we'll be updating information as we go. Are there any questions in there for me, Mary Jane?
Sorry, I've just been, there's one that says, hi, Cass, Mary Jane, tax on bullion and an SMSF. How is it calculated? Can we minimise tax on large gains? Sorry, I'm just trying to juggle your appointments, Cass.
Yep, that's okay. Yeah, that one, yes, there is tax on gains in bullion. It's quite minimal. So capital gains is probably one of the, if we can call taxes good, that's probably one of the better taxes. In an SMSF, it equates to only about 10% of the gain. So that's not too bad. The only way to minimise it in an SMSF really is don't sell until you're 60. Once you're 60 and retired, the whole gain can be completely tax-free. But I've always said, as a tax advisor for 30 years, I've always said, you don't plan your whole life around tax. Like if you need to sell and make a really good gain, capital gains tax at 10%, you still get to keep 90% of it. So if you need to sell, do so, cop a small tax bill, or if you can, wait till you're over 60. And that's probably one of the really good reasons for SMSF, is that the tax rate is lower, and a good reason why. A lot of people come to me and say, oh, well, I've turned 60 now, I'm going to pull out all my super. And I'm like, why? Once you turn 60, it's all tax-free. You actually want to put as much as you can into the super. Why would you want gold and silver bullion in your own name getting taxed at much higher tax rates when you could have it in the SMSF at either 10% capital gain or less, zero if you're over 60. So keep that in mind when it comes to capital gains. If you are, I've been helping quite a few clients lately. If you are making a gain on bullion in your personal name, as I said, the tax can be substantially higher. It can be 25%. So there are ways around minimising capital gains tax in your own name. So that is my golden rule for that, is to say to everyone, if you're planning on selling an asset, gold and silver, or any asset, property, for example, or shares, and if you're going to make a large gain, or any gain really, get some advice like before you even sell. because the best time to plan for that gain is before you sell, because there are quite a few things you can do. There's one particular thing called the 5-year catch-up rule, where you can put a large contribution into super to offset that gain. There's also things like minimizing your income in that year. So I have had clients in the past selling a large asset, large gain. It actually worked out beneficial for them to take the year off work and earn no income, because what they saved, like what they lost in not earning an income, they saved in tax. So they got a whole year off basically for free. So there's things like that you can do to minimize your income. There's also spreading the sale over quite a number of years. So rather than triggering a big gain in 1 year, you spread it over a number of years. So yeah, if you're ever going to make a capital gain, just have a consult with us. For those that don't know, you can book in a consult with me. Yes, I charge. Apparently I'm a shill because of that, but anyway, if I'm going to give my time sitting in my office giving advice, I'm going to charge for it. Sorry, but it's only $200. So I have saved clients hundreds of thousands. I've actually made clients millions with a $200 appointment. So yeah, I have no hesitation in charging for that.
So as Gabrielle's asking, does the 15% we get taxed when we roll over get deducted from our SMSF? So that's you're not necessarily when you roll over from your industry super fund into an SMSF, there's not necessarily any tax payable. 15% is just on your super guarantee that your employer pays in. There are some minor cases where an existing industry or retail super fund hasn't taken the tax out, the employer tax, and that will need to be paid for when it's rolled into the SMSF, but there's not an automatic 15% tax when you roll into an SMSF, if that's the question. Maria's asking, when we roll over from our industry-based super to a new SMSF, is there any tax? Oh, that's the same question. No. For Cass, can I change to you for creating my waterfall will, enduring power of attorney and document to put my home into my trust? We live close to you in Northern Rivers. Now, this is Bronte. And Bronte, you are actually already in our system. So I understand there was an urgent later last year. Our legal team, before Cass came back out of retirement, legal back office, they did some work for you. But absolutely, Cass has come back on. So we use legal back office when we need to for certain complex things and when we're absolutely overwhelmed. And they are certainly part of our team. But Cass is taking the lead on all this now. So Bronte, just get in touch with Cass. You are sitting in our list, and I think we have had some email exchanges. So there's no problem at all there.
Yeah, and for that, Bronte, and for anyone else listening, if it's to do with the estate planning and asset protection, particularly from this inheritance tax, which I believe they're bringing in, I believe they're bringing in a 30 to 40% inheritance tax. I believe it will be in the May budget. So let's see what a good psychic I am. I'm pretty sure I'm right. And
I don't want you to be right, Cass. Can you stop saying it's going to happen?
Then they may bring it in at less. They may bring it in at, say, 20%. But I believe they will escalate that very, very quickly, because every other advanced country around the world has a 30 to 40% tax. Some countries have a 50 to 60% tax. So I cannot see Australia, from what we've seen over the last 5 years, I cannot see Australia coming in cheaper than the other countries. Just can't see it. So 30 to 40% inheritance tax, which is basically all your assets that you would like to leave to your children, gone, or half of them gone in tax when you die. We have only till May to rectify this situation by getting your assets into a trust. And if anyone's interested in that, on our website, there is, I can see I'm going to get smashed for appointments out of this. There is a free estate planning appointment you can book with myself, and I will tell you all about that. It would be really helpful if you have the time to go to our YouTube channel. Perhaps Mary Jane can put the link to the video in the chat, and watch the video I've got on this topic before you have the appointment with me, because it just saves me talking. Some days I've had 10 appointments in a row, and I've had to say the same thing over and over again. By the time I get to the end of the day, I'm quite hoarse. So it really does help me if you've watched that video, because that way I can spend my time just focusing on you and your situation, rather than repeating everything I say in that video. But yeah, that's a free appointment online, estate planning. And yeah, I'm quite heavily booked, and I've got a huge workload at the moment. but we are getting help with some of Mary Jane's staff being dedicated over to help me. I've stolen all her good workers, but I need the help because, yeah, as soon as I get I was almost on top of things I thought today, but now I'm stuck at the hospital all day, and then later I've got to go to the police station. So, yeah, it never ends. And for all of us that hate the government, I just there are days when you are actually, no, I shouldn't say hate the government. I should say, for those of us that feel the government are overreaching into our private lives, which they are, I still believe the government has a role, and particularly when I'm sitting here in emergency services and having an ambulance turn up to my house within 5 minutes of being called, because I could face the blood. Bit of a story there. I was out walking my dog. My daughter rang me screaming. I ran home as fast as I could, but I rang my son, who lives about 10 minutes away, but he got there in about 5 minutes. He got there just as I got home, and I sent him into the bedroom because I just said, I'm no good with blood. Can you go into there? And I just stood at the door. You'll be okay, Kiana. You'll be okay. And I let my son look after her, and then the ambulance was only a minute behind him, so I let the ambulance look after her because, yeah, me going in and fainting wouldn't really have helped. But once they cleaned up all the blood, then I was able to go in and hold her hand. And anyway, the main thing with her was she had passed out as well because she's no good with blood, so we don't make a good team. We don't make a good team if either of us are bloodied. We both just passed out. Anyway, yeah, so there are days I am very thankful for the government. So there we go. Any more questions in there for me, Mary Jane?
Not that I can see. I just posted the link to the video. It's in a playlist which is called Estate Planning and Protect Your Wills. And I've just pinned the link in the chat here. But it is, that whole playlist has got a lot of really useful information in it. There's basically estate planning 101, 102, 103. It has did introductory videos like 7 months ago. But the one I've given the link to here is talking specifically about the strategy around the inheritance and gifts tax. So perhaps start with that one. Yeah. So no, there are no other questions that I can see here. Tom Landon Smith, have you just joined us?
Yes, yes, he has.
Tom is actually in Canada.
Oh.
And I think he booked this thinking it was an appointment with you. That was where the confusion is, but I've rescheduled his appointment for next Monday. So yeah, Cass is very, very booked out. So, and the booking is the one thing, but after the booking's done, there's a whole lot of work that needs to be done, and that does take time. So the quicker you can get it in, the better.
Yeah, so sometimes you'll see that I'm not available in the calendar, and that is because I've been fully booked, and then I do set aside every second day I set aside half a day, so I can actually do the work that I'm promising the clients, because I hate promising clients and then not delivering. So I am delivering. I give reasonable estimates of timeframes. The process does take about 6 weeks, and so far that we are managing to stick to that 6 weeks, which is good. And we're speeding up as we go, as we get better at the process as well, because the product of setting up these trusts, it's not a new product. It's been around for a very long time. I personally have been involved in trusts for over 30 years. I like to tell the story that 20 odd years ago, I wrote a master's. I did my master's in tax law, and I wrote a thesis paper on trusts. And it's quite funny that in that thesis paper, I argued that the tax office will never be able to attack trusts because they've been around for centuries, and they've stayed the same for centuries. And here I am 20 years later saying, yep, they're still the same. So my thesis back then is still correct. They will have a very hard time attacking trusts because they are based in equity law dating back to, we've tracked it down back to the 1600s. So the tax office and government, and the fact that most government people or high net worth people, they use trusts themselves. So they're not going to want to attack their own wealth creation vehicle. So the trust that I use to help with this inheritance tax, has been around for quite a long time. I've known about it for quite a long time. But for quite a long time, I've said to the average Australian, it's quite complicated and quite costly. So I don't personally think you need that. But now that if you want to save 40% inheritance tax, you want all your assets to go to your kids. Now, all of a sudden, it's changed. It's a game changer. I think everybody who has beneficiaries that they care about, everybody who doesn't want 40% of their money to go to government, everyone needs these trusts, and they need them before May. After May, it will be too late.
Maria has a question relating to what you're talking about. She says, is a living trust the same as a revocable trust? So I did a quick...
Yeah.
So I did...
No, if you've done... Yeah, you can answer that if you've done a quick search, Mary Jane.
I did. I just checked in with our family wealth protection definitions, and a living trust is a trust that's created during a person's lifetime rather than under a will. That's a testamentary trust. And a revocable trust is a trust where the settlor retains the power to amend or revoke the trust during their lifetime.
Well, no. So the ones we do are not that, because the ones we do at the settlor is generally just one of us as the accountants, and the trust we set up as settlor, we have nothing further to do with the trust ever after again, and that's the standard trust.
Yeah. Okay. Yeah. So I hope that answers that question. There's quite a lot more about that, but I'm sure you can. So if you've got a question, so what was prompting the question, I guess, is what I'm interested in. Where have you come across the concept, like someone offering a revocable trust? Gabrielle.
And what I can also add to that, I mean, every trust is revocable in a way, because when we set up a trust for you, so it's you as the parent or the person that's got the money that they want to put into the trust, you are what we call the appointor, and the appointor has the power to change the trust, end the trust, do whatever they want with the trust, whenever. So it is revocable in a way. We just have never referred to it as a revocable trust.
Now, in the chat, there's another question, which is, oops, is it? Sorry, what's going on here? Oh, sorry, I've just got scrolled up to the top. Is setting up an SMSF and needing to pay a tax debt prior to commencing, can it come from the rollover super? So the tax, so just to clarify this. So you're setting up an SMSF, but you have a tax debt. As long as you've got a payment plan set up with the ATO, that shouldn't prevent the SMSF from being set up. But if the tax debt presumably is for you personally, no, you can't use your super money to pay the tax debt. If it's for your super, then yes, you can pay the tax debt for the super fund out of your super, but it wouldn't be, because if you're in an industry super fund, there wouldn't be a tax debt. They would guarantee that. They take your money.
Yeah, just on tax debts, Mary Jane, there's been a new change that's that affects people.
Okay.
You used to be able to claim the interest on your tax debt, so the tax department charge interest. You used to be able to claim that as personal tax deduction. I believe that they have they've denied that now, and you're not allowed to claim the interest anymore. And the interest is quite high. Last time I checked, it was like well above standard rates. So you are actually better now. I used to tell people, like, just don't worry about your tax debt, just put it on a payment plan and pay it as you can. But now that it's probably more beneficial to seek out a personal loan. And there are actual funders that will fund tax debt. So, you know, if tax debt is standing in the way of you setting up an SMSF, yes, you can put on a payment plan, and that will you can still do an SMSF. But if the ATO won't let you put on a payment plan, which they won't if you can't pay it in accordance with what they're happy with, then you just seek private finance and personal loan and pay it out that way. Yeah.
Well, and that's why Cass, the accountant, reads all the ATO newsletters and updates.
Yes.
Someone has to read them. Peter and Cass do that, and I do other important things.
Yes, I'm a complete dork. I was at about 20 years old, and I used to sit on the beach reading the Income Tax Assessment Act.
Bless them, that just gives me chills even thinking about that. Okay, so Brendan's saying, which trust was that, Cass? Oh, sorry.
Yep.
I'm not.
Yeah, the trust that we're talking about for the asset protection, we call it a protective trust, family protection trust. I mean, basically, it's a discretionary trust. But with the ones that we set up, they're very specific in that they're bloodline. So they are for your bloodline only. And what I mean by that is in the future generations, when your kids have got partners and then they might separate with those partners. Those partners will not ever be able to claim on the family money because it's protected by the bloodline trust. That's what we want. And no, you know, some in-laws, some, you know, my son's got girlfriends that are lovely, but you just never know what's going to happen in the future, and you really want that money protected for your own family.
Yeah.
So that's the type of trust. It's called a bloodline family protection trust.
It is. And people often ask, well, what about adopted children? They're not technically bloodline. The point about these trusts is that they do have the capacity for you to specify that this person is to be considered bloodline.
Yes.
So if you had, you know, like your son's partner who you absolutely wanted to include, you could technically put them in there as their own, you know, acknowledged person who is considered bloodline, like an adopted.
And then you could remove them when they split up.
That's right. And that's the point, is that unlike normal wills or anything, which are all subject to the family provisions, courts and so on, you can specify who's in it and who's out of it. That's the most important thing. Sorry, someone's just joined and they're not muted. Would you mind muting? Now, here is a question, dumb question, no dumb questions. Does the trust hold the SMSF? So an SMSF is already a trust structure. An SMSF is a separate to the Family Wealth Protection Trust structure that Cass has been talking about. The SMSF trust forms a very important part of the overall wealth and asset protection strategy, but it is its own distinct part of it. It is probably the best part if you can not need to spend money until you turn 60 and meet the conditions of retirement, because the tax advantages at the moment are far greater for the SMSF than any of the other trusts. Cass, do you want to add anything to that?
No, that pretty much covers it.
Okay, great. So just going back to the questions, there's no dumb questions. That's a great question. Can a bloodline child contest a trust, or if they are not listed? If they are not listed, can they have no claim? So I guess
that's a good question. So I gather from that you mean if you specifically exclude a bloodline child. We're talking about two different concepts here. If it's your estate, so it's your will, you've passed away and all your money's gone to your estate via your will, yes, a bloodline child could contest that. Whether they have a claim or not is questionable. But the more problematic thing is, even if they believe they've got a claim, there are lawyers out there that do the no win, no fee. And they're hungry, blood hungry lawyers. They'll go after beneficiaries. They'll actually go out of their way to find beneficiaries to challenge estates. And whether they've got a good claim or not, the lawyers will take it on. Actually, sorry, it's not normally no win, no fee. Some of them will do that. Others will just take it on, charge an absolute fortune in legal fees. And so what happens is that the estate, or whoever you do want to have your money, has to spend all of their money on lawyers fighting the claim. So even if that person wins or not, there could be hundreds of thousands, in some cases millions of dollars lost to lawyers fighting these claims. So it's really, really not a good scenario. But there's two sides to that question, as I said. That is if you have left your assets via your will to your estate. When there is any sort of potential claim that you think might be brought about, a far better way to do is actually use these protective trusts, because that is moving your assets into the trust while you're still alive. And no one can challenge that. Okay? So if you leave it in your estate, it can be challenged. If you leave it in these trusts, it can't be challenged. So that's even more of a reason to be using these trusts while you're still alive and getting all your affairs in order so that it's all protected.
Now, Heidi has said that she and her husband set up a trust 4 years ago through Dominique Grabiska's company, Master Wealth Control Package, and that person's been sued and the company has kind of collapsed. They can still access a lawyer as they've renamed the company, but they don't really know where they stand. Except that the paperwork is in place and they have a caveat on their house and a testamentary will, but they don't know how that relates to the SMSF, if at all. What would you suggest? That they have an appointment for a review with you?
Yeah, I've had a look at, we've got another client, exactly the same situation. And as long as that paperwork is all in place, I do believe it will be effective. So the court case that was up against that company wasn't so much that the trust and the paperwork was invalid. It was that some of the claims they were making were invalid. So the trust itself and everything should still be absolutely fine. How it relates to the SMSF is it doesn't. These protective trusts are a standalone thing. They stand completely separate to the SMSF. So there should be no problems there. But yeah, if in doubt, you can certainly book in with me. I can't dedicate too much time to looking over somebody else's work and advising on it. But, you know, we can have a general chat about your position for sure.
Okay, sorry, I've just got a lot flicking around here. So Kathy and Astrid, who were asking about the bloodline, can a bloodline child contest a trust? So we need to make an allowance for such children so they can't contest.
Yeah, so that is what lawyers would generally advise, is that if you, that's it, that once again, in your will, you could put it all in a trust and avoid the claim altogether. But if it is going to go into your will and to your estate, the lawyers generally say just to make an allowance for that child or person, even if it's, you know, a small amount, but a big enough amount to be justifiable, but that then can prevent them successfully winning a claim. That doesn't mean they won't claim anyway, and your estate may lose a whole lot of money in legal fees. So it's a pretty nasty area. Here I am sitting at a hospital. We used to have lawyers called ambulance chasers that would literally chase ambulances and then try and get people to sign up to do a lawsuit against the car that hit them or the workplace accident or whatever happened. The no win, no fee lawyers. Yeah, they are apparently, so I've heard, is that there's more lawyers per capita in Australia now than any other country. We have surpassed the US. And some of those lawyers are looking for work. So they're not just ambulance chasing anymore. They're what's the hearse? The hearse that takes the dead body away. We could call them hearse chasers.
The morgue car,
The
or
morgue chasers, because yeah, literally they wait till somebody dies and then they use ancestry.com and things like that to find hidden relatives to take on a case to make a claim. Yeah, absolutely ridiculous. So, but that's the way of the world. Everything is a bit ridiculous out there.
So just so everybody knows, I have put the link to Cass's video, pinned it at the top of the chat. So if you want to have a look at that's always helpful. And one of our aims, or our major driving principle, is that we want to help men and women understand all of this stuff better themselves, to empower themselves, to take control of their own financial energy themselves. And in doing that, the more we take our own control of our own energy, the less that the evil powers out there can control us. So that's a part of what we do. Sorry, whoever's talking, just mute yourself. So Annie's got a question. Currently, I don't have substantial assets to transfer into trust. Sorry, I'll just try and find that person and mute them. Hi, Graham. I think it's you. You're always welcome. Like to see Graham. So here we go. Currently, I don't have substantial assets to transfer into the trust apart from the family home with mortgage, but I intend to build it up progressively over time. Is it still worthwhile setting up the trust now?
Yeah, absolutely. Because of this May deadline. So we want as many trusts set up as possible, and we need to set the trust up, set up the trustee company, and set up a bank account so that the trust can be proved to be in existence before May. Because worst case scenario, and I'm not saying this out loud on a live video, but paperwork can be backdated in some cases, but the proof of the pudding will be the company set up and the bank account set up that we'd want done before May to prove that the setup has been done.
And on a very practical note, let's say, for example, you do want to purchase some sort of property in your trust name. It is a little bit more complicated if you need to get a bank loan or anything like that. But if your trust is established and can be shown to be operating and has a bank account attached to it, it can be relatively easy. Some people may, like some professionals may say, oh, it's better to do it in your own personal name versus the trust. I mean, they're not necessarily wrong, but that's really only if your trust is functioning as a trust can, then it's doesn't need to be a problem. Banks are very comfortable lending to a trust. They just do it under their business section.
And there's also the fact that it's actually cheaper if you do it before you go and buy all your assets, because one of the largest fee in these setting up these protective trusts is the paperwork I need to do to transfer the equity of the property into the trust. So it's actually cheaper if you've already got the trust and we just buy the property in the trust rather than having to do this complicated paperwork. Yeah, but that does vary from person to person, depending whether it's a principal place of residence or an investment property.
Yeah, because this is one of the things I think people just need to get clear in their mind is if it's your principal place of residence, there is that capital gains tax benefit. So that's where you would be transferring the equity into the trust. But if it's an investment property, then buy it straight in the trust, bearing in mind there may be different implications for stamp duty. It depends on the state, but also the ongoing, what do you call it, state taxes?
The land taxes, yeah. And I mean, that's the sort of work I've done for like the last 20 years. I've helped people build investment portfolios, and depending what state people are buying in, it's a different scenario per every state. But basically, most of my clients have bought their investment properties in discretionary trusts for years upon years. So.
And then when you balance that potentially increased tax then versus the potential the asset grab and inheritance tax grab later, I mean, it's just a numbers game. So Maria's asked, with regard to the trust, can you add further assets you gain during your lifetime into the trust?
Yeah, absolutely. And that's one of the benefits of setting it up now, is that anything you do in the future, you can then consider whether it's best in the trust or not. Like I personally have used trusts for the last maybe 15 years, every single thing, even my motor vehicles are in a trust. Just so for asset protection. So.
And Peter's asking, if you have an existing trust but want to change it to a different type of trust, do you need a new trust or can you modify the existing one? And
we can do. Yeah, sorry, we can do an upgrade.
Yeah, we can do an upgrade. I was just going to say, we also recommend that every 3 to 5 years, you might want to just check in with your accountant or us to make sure that the trust deed is the best, sexiest, latest one, because things change all the time, and our trust deeds are constantly being kept up to date with what's going on. Usually not a huge difference, but for example, with the SMSFs and so on, for example, sometimes, if you've got a super old one, it's not going to maybe mention anything about crypto or some things that are quite new. And you want to make sure that your trust deed is the latest, greatest one. So even if you're not looking to change it for any reason, if it's older than 5 years, you might want to upgrade it. And we can do that relatively cost effectively.
Yeah, and as far as I know, I think the provider that we use, which is Grant Abbott from Lightyear Dots, as far as I know, his is the only bloodline trust out there. So if you have a discretionary trust lying around, also known as a family trust lying around that you're thinking about using, it is probably not bloodline. So that is one alteration. I would definitely think it's worth upgrading your deed to make it bloodline only.
So Brendan is saying, we're looking at selling our house to become debt-free. Should we set up a private trust before buying or building a new house?
Yes, absolutely. As I said earlier, it's better to set up a trust sooner than later. But you want to have a talk with me before you buy that new house, because as we were saying earlier, if it's your principal place of residence, we actually don't get you to buy it in the trust. If you do that, you'll lose your capital gains tax exemption. You'll be up for land tax every year. It's just not a good idea. So if it's your principal place of residence, we still get you to buy it in your own names. And then we use this complicated gift and loan back paperwork to basically transfer the equity of the property into the trust. And that's all in that video that I've put together. So basically you still own it, but it's worthless. I'll give you an example. I think an example makes it easier for people. Let's say your house is worth $1 million and you bought it for $1 million. So it's worth $1 million. It's got $1 million worth of equity. We transfer that equity into the trust with a gift and loan back. So now you still own the property. It's still worth $1 million, but you've got a loan on it of $1 million. So therefore it's worth nothing in your own name. People then freak out and go, oh my God, but then I'll have a loan of $1 million. Yeah, but it's only with yourself. it's only between you and the trust, and there's no interest, there's no repayments. It's really just paperwork. But it still makes the property be worthless. It's got no equity. So when somebody sues you or you pass away and somebody comes after that house, it's worthless at that stage. At that stage, the equity or the value of that does end up transferring into the trust to satisfy the loan, and you've got no assets left. That's in a nutshell how it works.
I just want to say thanks, Bronte, for the thank you. Thank you, Bronte says, for giving your time. Cass and Mary Jane, so valuable and gives you great ease. Well, thank you. You're welcome. So Maria is asking again. She said, sorry for all the questions. Don't worry, Marie. Can other members of your family add their assets into your trust that you set up?
Yeah, absolutely. I had this with a client yesterday, and yeah, it really depends on your family. If you've got a absolutely loving family that get along fantastically and agree on everything, by all means, you can all be together in one happy little family trust. Most people then, once they realise the technicality of putting all your assets together, go, oh no, God, no, I wouldn't want my brother in this, and I wouldn't want. So yeah, it really depends on your situation. I do know of families that put it all in together. Yeah, that's very, very common out in the country when we've got big farms and things. They can be generational trusts that last for a very long time. So yeah, depending on your circumstances, yes.
And so your trust, Cass, it actually starts with the principal here, and let's say there's 3 children. When that person passes away, they'll get 3 sub-trusts. That's how it works, isn't it? And then it will go. So you think of it like you would be starting a generational trust that never needs to end at all. And I found this interesting, and I'll just share this because I found it interesting. There is an 80-year limit on trusts, except South Australia there's no end to it. So that's where we will set up the trusts to be in, what's the word? I don't remember, but the South Australia. And this all came highlighted with I think it was the Murdoch family fights. They had all this stuff. Anyway, so just to let you know that the trust that we set up can go on and on and on beyond the 80 years.
Yeah, exactly. And you can actually, so me, for example, I have stepped down from my own family trust already and just left the assets with the children. God damn, I must love them.
Oh, no, wow. So Maria was actually only asking about the children, not, so I think you answered.
Yeah. So, and the trust, we set them up in South Australia so that they will last forever rather than end in 80 years, because believe it or not, 80 years goes pretty quick. We're all getting older. Any other questions in there, Mary Jane?
No, I think we have. Oh, no, there is, Brendan. And how can we protect our profit from selling? Is this where we buy gold, silver? So I'm not. Okay.
So that's capital gain on a sale of a property. I've said earlier that if ever you are going to sell an asset, have a consult with me so that I can tell you whether there's anything you can do. There's the 5-year catch-up rule, contribution into super that could help. There's splitting sales over different years. There's reducing your income. But capital gains on a sale of property is pretty nasty because you simply can't avoid it. The tax office have data matching. The moment you sell a property, it's going to go onto your tax records. The next time you do if you check MyGov or do your tax return, it pops up straight away and says, we notice you have sold your property. Please tell us about that. So can't get away with capital gains on selling a property. Just do some advanced planning before you sell it.
Yes. And I learn all these lessons the hard way. Okay, so we have, but actually, did you mention, sorry, I've got a gazillion things going on here today. I apologise for being distracted. Anyway, if you do have a capital gain, so you can potentially offset that by making a personal concessional contribution into your SMSF. Did you mention that one, Cass?
Yeah, that's the 5-year catch-up rule. So you can actually go back for 5 years. Some of you probably know you can contribute, I think it's 30,000 now a year into super. I think it was 30,000 last year, then it was 27,500, and then it was 25,000. So, but it's easy to find on the tax office what the limits were. If you haven't maxed out that limit every year in the last 5 years, so let's say last year you only put in 10,000, but you could have put in 30, and carry forward that 20,000 and put it in this year with this year's contribution of 30. So 50,000 in this year. Whole 5 years, I did a calculation for someone yesterday. They can actually put in 125,000 and both him and the wife could do it. So that's 250,000 into their super fund, which will directly come off their income, reducing their capital gain to basically zero. And they were 59 anyway, so they can get the money back out of the super next year. It was an absolute perfect scenario to save a lot of tax.
And before you actually just go ahead and do that, book in an appointment with your accountant to do the actual calculations for you, because there are very, very tiny little things that might mean you can't do it. And I discovered that the hard way. I learn all these lessons. So now there is one more question. With regards to an SMSF, this is Maria, and purchasing gold and silver, do we recommend allocated or unallocated, or actually taking delivery of the metals? And there was with the 5-year catch-up concessional caps, isn't there a max you can have in super each year? That's the 30,000 you were talking about, but you can catch it up for 5 years. So yes, there is a max, but there's a lot of different little caps. So if you've got a specific situation where you want to do your own calculations, book in a consult with your accountant. It's either Peter or Jolene or Mark or somebody here. Or if you don't know, just ask me and I'll find out who they are for you, and they'll do the exact calculation for you. And I was just talking regarding the bullion question. I was talking to a client this morning, and I said, there is no particular answer to whether you do it, pick it up yourself, or allocated, unallocated, or putting it in a private vault. It depends on your situation. You can do one of the three, or all, or one of the four, or all of the four. And what that means is you can go into the bullion merchant or have them deliver it to you. You take it yourself and you put it in a safe in your house or some location that you have access to. That's the first method. The second method is you can go and pick it up and walk across to, say, the Reserve Vault in Brisbane or the Melbourne Vault in Melbourne or one of the private vaults, and open your own lockbox and put it in your private lockbox so that no one else except you have access to that. That's the second one. The third and fourth is allocated or unallocated, and they're identical except allocated means when you buy, well, let's say that's a kilo of silver. It's actually whatever, it's fake, but anyway, let's say it's an ounce of gold and you buy it in allocated. The bullion merchant Ainsley will put your name on that particular bar and they'll put it on their shelf, and you will pay storage and insurance for your bar with your name on it to go on the shelf. That's allocated. Unallocated is exactly the same. Oh, and you can redeem it. So if you want to take it home, you go in there and you say, oh, take that home now, thank you. And they find your name and you take that bar home. Unallocated is exactly the same, except your name is not on a particular bar. It's against 1 ounce of silver or 1 kilo of gold. And you can still go in and redeem it and say, I'd like to pick up my 1 kilo of silver now, thank you. And they'll just pick up the first bar that they want to take off their shelf. Might not look very nice, and they'll give it to you and you'll take that home. Now, the difference between unallocated, pooled assets, so not your name on a particular bar, and allocated, where your name is on a particular bar, is you don't pay storage fees and you don't pay insurance. So it's a much cheaper way of doing it. So they're all the different ways you can.
Yeah, the only thing I will say about that is, like, I have used the allocated and the unallocated pools a lot over the last few years. In the beginning, I was saying to everybody, store it at home. And then I realized I was on a public channel telling everybody that I store all my gold and silver at home. I thought, yeah, that's probably not a good thing. So I moved it all into a vault. And then when I started buying more, I started buying it in the unallocated pools because it's the cheapest. I do absolutely trust Ainsley Bullion, and that when they say that they've got an unallocated, say, like, one however many million out the back, and you've got your percentage of that, I do trust them that they have that. However, there has been some issues with other gold dealers. ABC Bullion apparently got into trouble for this. We're basically, and because at the moment, if any of you have been looking to buy silver, a lot of the dealers are running out of stock. So even Ainsley have got on their website, out of stock on so many items. So I was worried that the gold dealers might go, oh, okay, all these people are ordering. We'll just go and get it out of the unallocated pool and sell it. And then we'll get our order next month and then we'll put it back in the unallocated. What if that order next month doesn't turn up? So at this point in time, because of the market, Ainsley bullion, I'm okay with, but I would be a little bit cautious using an unallocated pool with another dealer. So yeah, that is just one thing to bear in mind. So
Well, and here's the other thing that is you can, like silver, for example, is so heavy and so big. And I have actually traveled myself on a plane and I had 15 kilos, 5 kilo silver things. Not all for me. I was bringing some for my daughter and I had to fly on a plane. And of course, I realized that you can't put 15 kilos in a carry-on. So I strapped it to my waist in a little bum bag thing. And I'm never doing that again. So now I only buy silver if I have if I buy it in allocated. But then what is my plan, and this is just my personal process, I'm thinking, well, when I'm going to sell that silver, I will just transfer it into gold because that's my aim. You get the gold silver ratio, you transfer it into gold. Gold's much easier to carry, and then I'll go and redeem it. So I'm doing the buying online. I'm in Canberra. I buy it through Brisbane, unallocated. Buy it that way, quick and easy. If I want to sell it, quick and easy. And then if I want to redeem it, just can go and pick it up much more easily. That sounds like a silver workout. Yeah. Oh no, it was horrendous. I was sweating. I had 10 kilos around my waist and 5 in the bag. It was, oh.
yeah, I've been known to do things like that. I'll be honest. I was a little bit concerned about the unallocated pool myself. Even with Ainsley, though, I really think they're absolutely fine. But I did have a moment of panic when late last year when they did say that, the whole world was about to crash and there was going to be no silver left. So I said to Ainsley, I said, "Can you convert all my unallocated to physical, please?" And they're great. They'll actually take it to the vault for you. So I could just go straight to the vault and pick it up. And I turned up and to pick it up, and I turned up with a little backpack. Turned up and they had a whole trolley full. They brought it out on this wheelie trolley, and I went, ah, shit. So I had to quickly hire another vault and put it in there into my private vault instead of unallocated. But yeah, silver is very, very, very heavy. I've lugged it around many different places. So just, yeah, always when you're ordering silver, just keep an eye on the kilos because, 20 kilos, if you buy 20 kilos of silver, that's 20 kilos. Can you comfortably carry 20 kilos on your shoulder? Probably not. Or maybe if a bloke can, but a lot of us women can't. So,
and for some
just,
reason, the density of it, it's 20 kilos. I'm like, oh, yeah, I can carry 20 kilos. That's just like a bag to put in the airport. I can do that. It's actually the density of it just makes it feel like 30 kilos. I don't know what that
yeah,
is.
yeah, yeah.
Perth mint. Maria has said the Perth mint, question mark, safe, question mark.
We haven't had any dealings with them. Didn't they have a big audit problem as well at some stage?
Rings a bell. Yeah.
Oh, fuck, something just bit me.
Ouch.
Well,
Yeah. Lucky you're in the
yeah,
hospital.
yeah. Look, we just really like Ainsley. It's because they're like-minded. They're real people. They treat their clients like real people. Their customer service is fantastic. Someone on there just said their spread is. I haven't actually compared their spread to other dealers. Might have to do that sooner than later. But their customer service is absolutely impeccable. So, and the other thing is because they're like-minded, they're a little bit more liberal with their processes and their paperwork. So.
Oh, don't say that on. I think they're squeaky clean. I think, well,
Yeah, no, they're absolutely squeaky clean. They do everything 100% by the book, but they understand why we're doing what we're doing, and you can have honest and open conversations with them.
absolutely. And in fact, what Cass means by liberal in their process is, for example, with an SMSF, you, the client, will have $100,000 a day limit on what you can transfer. So if you've got an Ainsley Bullion invoice for 300,000, you've got a daily limit of 100,000. Ainsley understands that. They'll say, oh, that's okay, pay it off over 3 days. Another way to deal with that is just ask me and I can help initiate the payment. I can't finalize the payment. I can put the data in and that'll give you a higher limit. But that's what Cass means by understanding. They're more flexible. They're not AI bots. They're not faceless people. They're real people that come from the same point of view that we do. So, yeah, their understanding is great. Now, the thing about the spread of silver is the highest. So I haven't looked at that for a while, but I do remember 2 years ago, someone pointed out that Ainsley was actually cheaper than ABC. And this is before I started really knowing Ainsley, maybe 3 years ago, I'd say. And I used to use ABC because it's in Sydney, I'm in Canberra. And they said, oh, actually, Ainsley's cheaper. Now, things must change all the time. I don't know. But yeah. Yeah, and maybe the spread, who knows, maybe there's just such a demand at the moment. I don't know. I don't know.
I think at the moment, I've noticed, if anyone checks at the moment, I think the spread, not just with Ainsley, but with all the dealers, has for some reason increased. And I think that's got something to do with the shortage of silver at the moment. So
Yeah.
maybe just a temporary thing, I'm not sure.
So Bronte would like us quickly, in 3 minutes or less, to explain the gold-silver ratio. I'm happy to do that if you like, Cass. Or
Yeah, I might leave you with that because I should go back and check in with my daughter. I've left her for an hour now, so I'll see you all later, and hopefully my daughter's going to be okay. She's going to be squeamish when they give the stitches, and I will be too. So I'll be holding her hand, looking at the other wall. But together, I'm sure Mum and daughter will get through this. So yeah,
no worries, Cass.
lovely to see you all, and we'll see you again next time.
All right, no worries. Bye, Cass.
Bye-bye.
So just briefly, the gold-silver ratio is, let's say you've got 1 ounce of gold and a kilo of silver. Sorry, 1 ounce of gold, 1 ounce of silver. And it's at the moment, I'll just have a quick look. What is it today? Gold silver ratio today. It's oh, wow, it's really, really, really gone down. So about a month or so ago, you needed 90 ounces of silver to buy 1 ounce of gold. Okay, 90 ounces of silver to buy 1 ounce of gold. Over the last 30 days, silver has increased by 33.5%. So the ratio now is 54 or 55 to 1. So let's say it's 55 to 1. So you only need 55 ounces of silver to buy 1 ounce of gold. So it hasn't quite halved. So it hasn't quite come down to 2 for 1. But, sorry, instead of it being 90 to 1, 55 to 1. But it really means that you've almost got double the value of gold from your silver. So that's what it is, and that's what people watch. I had always said to myself, when it comes down to 50 to 1, I will sell all my silver and buy gold. I'm just sitting on that for the moment. I'm terrible. Never follow what I do, because as soon as I buy or sell something, it goes in the opposite direction. So I need to look at somebody else who's successful. I have the opposite. So that's basically what it is. And that's why, one of the reasons why people have been buying a lot of silver over the last few years is because it was significantly undervalued versus gold, and also the industrial uses were increasing and increasing and increasing. Okay, Maria's saying wait, Mary Jane. Yep, okay. My other person that I was asking, who seemed to have done it successfully, also said wait. So all right, thank you. I did have to sell some last week to pay a little debt. So but anyway, it's all good. It was more than I bought it for, so I'm happy with that. So that's what the gold silver ratio is on our website. Actually, on Ainsley website, under Insights, you go News and Resources, and you go to Resources. Actually, I think it is Resources. I'll just put it here. There's a very good article which says the gold silver ratio explained. So I'll just put that link in here. Yes. So just finally on that. We don't know exactly, but naturally they suggest that the natural ratio may be around 16 to 1. Some say 25 to 1, but nevertheless, it's well under the 55 to 1. But I think in recent history, in the last 20 years, the best ratio was probably 30 to 1. As in terms of switching silver to gold, it was 30 to 1. The highest it's ever got to was in the last 6 months. It went to about 100 to 1. So even if people say, oh, well, silver's expensive, you want to be looking at that ratio. I'm quite surprised that it's dropped. I haven't been looking at it for a while. But this last week's been crazy. Silver's gone up something like 9%. All right, it is now 1:31. So everybody, do I buy and sell platinum? Not me personally. I think Cass has some platinum. And platinum has a whole different dynamic. And just on that, gold and silver are considered different asset classes because they perform and act differently. Platinum similarly. So if you've got cash in your SMSF, gold and silver, that's already 3 asset classes. So you are diversified. All right, I have to go. Great to talk to you. We do have another one coming up in I think 2 or 3 weeks. Sorry, Lynn, you've just jumped in and we're just finishing. Maybe you got the time zones mixed up. I'm really sorry. By this afternoon, this video will be up on our website. So on our YouTube channel, go to our website, click on the YouTube icon, and it will take you there. Thanks, guys. Nice to see you. Bye.